All right, good morning, everyone. Happy November 4th. I hope you all had a great weekend. Hope you had a warm weekend. But all right, guys, so here's my game plan for this week. Might not be a popular game plan, but it is my game plan. For the most part, I'm looking to have a relaxing Monday, Tuesday, Wednesday, Thursday. What I don't want to do if the QQQ can't, we can't get back above a 21 EMA, if we can't get below a 50 SMA, I don't want to get my head bashed against the wall into the election and into the FOMC. Get through Tuesday, get through Thursday. Then I think you take that daily squeeze. And then we got the same question we've had for just about a month here. Do they want to fire that to the upside, or do they want to fire that to the downside? The signals are somewhat degrading. Lower time frames may be a little bit more bearish, but bigger picture, below 490, above 480. I think a lot of back and forth chop. I think a lot of noise. I think a spot where if you're trying to get long or short, could be a little tricky. 1-2 closes back above the 490. 15, 30-minute hourly buy signals. Then I think you jump in and you buy it. We're below that 480. And we got 15-minute, 30-minute hourly sell signals. It's all shaping up to be an easier short. But for the most part, in between the two, I want to hang out with my dog. Maybe I'll get some early Christmas shopping done. I don't think I'm going to miss a life-changing opportunity if we remain in the box. Get to Friday, and then maybe a different story. And then jumping over to the sheet. The sheet paints a very, we'll call it bearishly neutral. Nowhere near bullish, nowhere near absolutely bearish. A little more neutral with a hint of bear. The S&Ps get a total score of -4. All right, now, if the strongest total score is positive 75, and then the weakest score, of course, is -75, -4 is nothing crazy. But I don't think I want to jump in and buy calls on a -4. QQQ a -4, IWM a -7, Dow Jones a -7. For the ideal short, they could definitely get a lot better. To want to jump in and get long, they could get way, way better. So that tells me be patient. Crappy scores in the context of a box. Back above the 21 EMAs, scores are improving. Here come the buy signals. Then I want to go and look at some maybe some Amazon, Netflix, Google, Tesla, Nvidia. For now, they hold up pretty well. If the market breaks lower and I'm thinking short, we got Microsoft -42, Apple, Broadcom, a little bit of everything there. But yeah, guys, I love to wake up and have, really good watch list, 2, 3, 4, maybe 5 things. I know I want to buy. I know I want to short. Not that kind of morning, and I don't think that kind of week, again, until Friday. The one thing I will look for, and I can look for even if we're in the box here, 15-minute, 30-minute, maybe hourly squeezes. Not trying to call for a home run. I'm not looking for day after day of strength, week after week of strength. Ideally, I'm going to take a few of the better names. So for conversation's sake, I'm looking for a 15-minute, 30-minute squeeze. I want to buy it and I want to take a day trade. Well, I don't think I'm looking at Microsoft, -42. I don't think I'm looking at Apple, -20. Broadcom, Meta. Even for a day trade, if I want to get long, I got to go look at Amazon, Netflix, Google. A few of the names that actually hold up all right. Vice versa. Market's rolling over. I want a day trade to the downside. I don't think I got to go pick on Amazon. I don't think I have to pick on Netflix. I'm going to go try to short one of the weaker names. Apple, Microsoft, etc. So in the box and until Friday, that would be the one plate of opportunity that I look for. Trying to get swing long or swing short. In my opinion, at least, not an easy game under 490 and above 480. You load up the puts on the initial flush. Next morning, they gap it up and they rip it. So now you cover your shorts, you're a little bit PO'd, and then you turn around and say, all right, well, my short didn't work. Things are looking pretty bullish here. You know what? I think I'll jump in here and buy a call. Half hour later, big rejection. They're flushing it right back down. I would expect a lot more of that until you get that bigger break. Could be dead wrong. I'm not too sure we get that bigger break till we get through a few of the catalysts. Now, for conversation's sake, we get through this week and S&P's QQQ, they've all rebounded. They're all back above their 21 EMAs. They've all got buy signals. All right, what are a few spots I might want to go look to buy? And again, I can't stress enough, I'm not going to be the first guy to try to buy Microsoft. Somebody else can be the first one to buy a -7. All right, so if the market can rebound, the big if, one name I do like here would be Amazon. My preference would be maybe buying it on a pullback. Daily squeeze, buy signal, perfect score of 15. If the QQQ gets clobbered, I know that could all change for the worst, of course. For now, that checks out. Really clean 2-day squeeze. Gotta like that. And then possibly the biggest weekly squeeze ever. Today will be 23 weeks. 23 weeks into a big weekly squeeze, which I don't think will break out to the upside without the QQQ behind it. If they ever do break it out, then I think Amazon's headed towards 215, 220. If I get a buy trigger on the QQQ, yeah, I would love to take a shot here on Amazon. Another one I think worth watching would be NVIDIA. And of course, a little news for NVIDIA this morning. They are going to replace, who was it? Intel. NVIDIA going to replace Intel in the Dow Jones. The key here for the short term, they've got to keep it above that 135. Nothing good happens for the bulls when you're hanging out under that 21 EMA. Above that 21, I would like to get a few buy signals. 15-minute, 30-minute, hourly. The bigger story here, I think, has got to be the weekly squeeze. For now, it checks every box. Buy signal, score of 15. Do they fire that before earnings on the 20th? I think that'll be more of a QQQ overall market thing. It ends up being a really strong week for the QQQ. NVIDIA might want to get at least a decent part of that push going. I'm watching Amazon. I am watching the NVIDIA. And then that's about it for the most part, guys. Quick look here at Google. Google got a buy signal, the perfect score. If I get a buy trigger on the QQQ first, Google above that 170, could make for a nice spot to buy that flush. Can previous resistance turn into brand new support? Got to get the QQQ moving, though. All right, so Amazon, NVIDIA, Google. Netflix also holds up pretty good. And we have a 4-hour, 2-hour, hourly, 30-minute, 15-minute squeeze on the Netflix. And then the last one would be Tesla. $1 million question here for Tesla. Can they actually hold a pullback to daily support? Rip it off the bottom, print a daily buy signal. Like your first back test of your 21 EMA, everything just kind of crumbles. They again rip it off the bottom, brand new buy signals, first pullback, it all falls apart. Gap it up again, pump it, brand new buy signal. If they can hold it above that 240, they might be in a spot where Tesla can actually begin the trend higher. You haven't had daily trend in pretty long time. All right, flush it, pop it, flush it, pop it. A lot of ugly back and forth. As a swing trader, you're looking for higher high, reversion to the mean, higher low, stabilize, find support, turn the corner, higher high, higher low. It's a beautiful thing when it happens. Back under 240, I don't think that's happening here anytime soon. If the market rebounds, if we get buy triggers on the indexes, I'll go look at Amazon, I'll go look at Nvidia, Google, Netflix, maybe Tesla. Would have to avoid a Microsoft under the 50, under the 21, the 200. Little nasty. Apple's a little mixed here. Uh, I would be a fan of the weekly. Ask me again on Friday, but for now, I like the weekly chart a lot. Good hold of our 21 EMA, big squeeze, buy signal, perfect score. The issue is you can't take a good-looking weekly, jump in there, buy calls, expect a breakout when you drop one time frame lower and your daily chart looks like that. I've got a weekly with a score of 15, and then one notch lower, I've got a daily chart with a score of 0. The odds would suggest you probably don't get that weekly squeeze breaking out if they can't even hold price above a daily 21 or a daily 50. They want to go and bounce it back into 230 this week. I might be a bigger fan. Meta here. It just kind of reminds me of the QQQ. Couple of closes back above a 21 EMA. I might want to be a buyer. Couple of closes below the rising daily 50. I might look for a short. Keep it in the box. I'll be a day trader. A day trader or anything other than trading. Every now and then, it's the best thing you can do. Save all the cash, save all the mental capital. Wait for the break. But all right, folks, any questions, anything y'all want to look at? More than happy to take a peek for you. 2 levels I would mark up on the QQQ and the S&Ps, daily 50 and your daily 21 EMA. And if you don't want to sit here and day trade it, scalp it, make your life as easy as possible. QQQ, go drop an alert around 492. 491, 492. And then go drop another chart alert down at right around that 480. Right down yonder. Little bit above the 490, little bit below the 480. Throw on a few chart alerts, get your mobile notifications. And I can promise you guys and gals, if neither go off today, very good chance you're not missing a massive move. Maybe a few spots for a couple, quick little bounce, maybe a quick short, but nothing where you're sitting back thinking, oh my God, I just missed the move of the year while I was outside walking my dog. I would do that on the QQQ. I would do that on the S&Ps. And then just the understanding, to the extent we can't break out of that range, should have an impact on a lot of the individual stocks. You might have a few things on your watch list, really bullish. They're all shaping up for a big move. If the indexes are stuck, it just makes that big breakout a lot harder. You've got a couple of things on the watch list that set up for perfect short. If the S&Ps and Qs just keep on bouncing off that daily 50, being short anything might be tricky. Claudia, to day trade ES, what would I suggest? All right, so to day trade the S&P futures, most times when we think day trade, we think lower time frame. And I do as well, but I try to think lower time frame in relation to a bigger picture, more meaningful level. So for example, if I get a really clean 15-minute signal, but the daily chart, we're kind of in no man's land, I can still take that 15-minute signal. But if I'm getting short right under big daily resistance, I'm buying it right on top of big daily support. I think it adds a little more context and a little more edge to just, hey, I'm buying it or shorting it off of the 15. So a good example would be, two potential focal points: 21 EMA and the daily 50. Right, you can look at 5750, 5800, big numbers. But all right, I'm going to mark up that daily 50, and we'll paint that red, pink. All right, now I've marked up a bigger level from a bigger time frame. Now I'm going to go drill down to the hourly, 30, 15, try to get more context, try to call for direction, ideally find a setup. With the thinking being, all right, my 15-minute, 30-minute, they might give me a really good short here. Good to know if I take it, I'm getting short right on top of the daily 50. We rally and we're right up under the falling 21 EMA. Here comes a really bullish 15-minute squeeze. I can take it, but good to know that I'm taking it right under the 21. I might short it here and then they bounce it. I might buy it up here and they reject it. All right, so we drop down to the hourly. My first question: bullish, bearish, or neutral? Then I get concerned about levels, squeezes, etc. Come on, toss any day. Toss is already getting, there we go. Already getting weird. Okay, bullish, bearish, or neutral? Now here's where the scoring system can be helpful. We don't have the all-out sell signal. Right? Candles are blue, no red candle. I can look all the way up here to the label, get a little context. It might not be weak enough to trigger a sell signal, but -8, yeah, we definitely lean a bit more bearish. I don't love the idea of buying a -8 in the context of a squeeze. Now, any day trading I might do today, there's more good context. We're above the daily 50. We are below the daily 21. And now we're building up a bit of energy here off of the hourly. Drop down to a 30, bullish, bearish, neutral. Oh, toss. I think toss drank too much this weekend. Well, 30-minute squeeze, -13. So point being, at this moment in time, we're above potentially a big level of daily support. But then from the ground up, the 5-minute, 15, 30, etc., everything does lean a lot more bearish, and we have a lot of squeezes. From there, if I take the short, the easy money might just be from the current price down to that daily 50. If I short 5 S&P future contracts, maybe down there at the daily 50, I cover 4. Right? They break it, I leave a runner, I make a little more cash. So I want to make sure I'm not getting long or short, too close to a key level. That might end up capping the whole potential of the trade. And then, as always, Claudia, whether it be a 15-minute, whether it be a 30, long or short, do I have that multi-time frame alignment? If I'm going to short it on the 5-minute squeeze right now, I would even drop down, check a 3-minute, check a 2-minute. Do they confirm my thinking we want to push lower here? And then, as always, the squeeze, I think, is a major bonus point. So anchoring to bigger picture levels, then taking clarity and setups from an hourly down to a 5. Being careful not to run right towards big level for a bounce or a big level for a spanking. But Claudia, I tell you what, I'll be on the mic in our room in about 20 minutes or so. We can look to do exactly that. That I actually think is the kind of trading that makes sense for a few days here. Here's why. If I go short the 5-minute on the S&Ps, I can short it right here. I can put my stop above the 21. I can put it above the 50. I can put my exit order for my target down here at the daily 50, and then I can just walk away. I'll lose X amount. I'll make X amount. No theta, no time till expiration. None of the option shenanigans, which I usually love. Hey, RBG3. So all the updated stuff is on the indicator page. So if you go to the indicator page for the big 3 squeeze, scroll down towards the bottom of that page. You'll find a button that has the scans, watch list columns, and share chart links. Download that PDF. You've got all the updated scans, the new flex grid, all the brand new watch list columns, a scoring system. And then I don't think they've added it to the web page just yet. But I do have a video as far as how to take a blank version of the spreadsheet and then fill it out with your own watch list. And I'll do my best to make sure they put that video up on the indicator page this week. But aside from that, all the updates are live. Yeah, Alan, there's another alternative. We could trade the futures through the options, which I've done before, and it's made for some really nice trades. And then to your point, the other alternative is, maybe it's an iron condor kinda Monday, Tuesday, Wednesday. What I think can make for good iron condor action is a lack of buy or sell signals. Everything's a bit more neutral, and then also a lack of squeezes. If we have a 4-hour, hourly, 30-minute, 15-minute squeeze, and they've all got a buy signal, the condor could work, but God forbid, 15-minute squeeze fires, then the 30, then the hourly. They go release all the energy, they might be coming for your condor. Not overly bullish, not overly bearish, no daily squeeze, no big 30-minute. That tends to point towards chop between a couple of key levels. We call that a moving average sandwich. And mind you, I don't love these kinds of 2, 3, 4-day periods. I'm like every other trader. I want to take setups. I want action. I would like to have a big week financially. We all do. You trade long enough, you learn the hard way. Right. In the moment, it might feel like forever, but realistically, it's 2, 3, maybe 4 days. Just take a chill pill. Don't be out there throwing on crazy ass size. Look for a few day trades. Look for a few opportunities. Stay loose. Stay warm. Nothing sucks more than we're caught in the box, and you're getting long, then you're getting short. You're getting long. You're getting short. They're knocking you down left and right. Then the market finally breaks. Big flush down the 460, big rally into a brand new all-time high. You finally get the move to take advantage of. But because you forced the issue and you couldn't chill for a few days, you took too many licks, too many bruises, mentally and maybe even financially, you're not in a good spot to jump in and take advantage of the bigger move. I've done that plenty of times. We're going into a Fed announcement. I'm shucking and jiving. I take a couple of shots. I could take a little damage. I'm not too quick to jump back on the donkey when all the dust finally clears. All right, good morning, Trip. Thoughts on gold? Earnings would be on the earnings on the 7th, so that could change things for the better, could change things for the worse. One good rule of thumb that I try to always abide by, anchoring to that 21 EMA on the daily chart. Then the thinking being really simple. If we're above that 21 EMA and 15-minute charts are bullish, 30-minute, 1 hour, 2 hour charts are bullish, I want to lean towards looking to buy it. Below that daily 21 EMA, 1 hour chart's more bearish, 30-minute chart is bearish. I want to avoid the buy side and maybe look for an opportunity to short it. Again, that could all change. The whole picture could change at the open on the 7th. And I believe that's a gold miner, GOLD. The only thing I mentioned here about gold itself, the weekly squeeze worked perfectly. The weekly squeeze we got back here in, what was that? Early August. Did everything we can ask from a weekly squeeze. Built up all the energy near our 21. Breakout releases all the energy right into your 3 ATR target. If you can draw up the perfect playbook for a squeeze, that's it. Build up the energy, release the energy, go smooch that 3 ATR. Now, from there, nothing says gold can't keep going higher. We've seen weekly charts go from 3 ATR to 4 to 5 to 10 to 20. Probabilities-wise, it already made the easy part of that move. Look at it like you're showing up to the movie theater and the movie starts all the way back here, and now you walk in with maybe 25, 30 minutes left. That remaining 25, 30 minutes might be really good, but you're not getting the full shebang. Doesn't mean it can't keep going higher, doesn't mean it has to pull back, just bigger picture. A lot of that recent strength here, I think, came from that weekly squeeze. Now that you've hit the target, would not be the craziest thing. Little pullback back down to 250-ish. Retrace the daily 21, then maybe turn it back up from there. Rocky, HPQ. Good morning, Rocky. I think it's in the same boat as a QQQ. The S&P's in meta. Today, tomorrow, any point this week or next week, cranking out a couple closes back above the 21, 15-minute, 30-minute hourly buy signals. At that point, I think you take that daily squeeze, and you have to look for a spot to buy it. Today, tomorrow, any point, couple closes below the daily 50, 15-minute, 30-minute hourly charts go bearish, it becomes a much, much, much easier short. It's just in my experience trying to call for either in the box. Not always the easiest. You short it on Thursday, and then by the time you wake up on Friday, you hate that decision. So you buy it on Friday, and all they really do is bounce it back towards the top end. They yank it down again today. You hate the long, a lot of back and forth. Guys, here's the good news, and I got to let you go. HPQ, QQQ, Amazon, Nvidia, Tesla, Apple, etc., etc. At least a lot of the things that I watch, they have a lot of bigger time frame squeezes. Weekly charts, 3-day time frames, 2-day daily. The good news of that is usually when they fire. We're not talking about 5-minute, 15-minute squeezes. Those fire, it can make for a little pop. We're talking about much bigger time frames. When they fire, they can kick off really big, really sustainable moves. We'll take NVIDIA as a good example. If the NVIDIA weekly squeeze fires to the upside, I think NVIDIA has a path into 160, maybe a bit higher. When the previous weekly squeeze fired, you went from 40 all the way into 90 before your first pullback. I'm not claiming that NVIDIA doubles again, but point being, you don't have to be the first guy or girl to buy it. Let them work through it, let them break it out, then you jump in a little bit more clarity. Or perhaps the next good trade is a big short. Who knows? That might be the case. If that is the case, I think whether you short it up here at 487 or you short it on the break of 480, I don't think it'll be a massive, massive game changer. Shorting at 480 may be a little later to the party, but I think now you're showing up with more conviction. But all right, folks, I've gotta let you go here. Hey, for those of you in my room, I gotta make a quick phone call, so I'll be on the mic right at the open or a minute after the open at the latest. For the rest of you, thank you for your time as always. I am back with you on Wednesday, same time, same channel. And yeah, again, my best piece of advice, in terms of swing trading, things you'll hold overnight. S&P's QQQ, put a chart alert under your daily 50, put a chart alert above your daily 21. And I would suggest being really cautious about, loading up the calls and loading up the puts until that range finally breaks. Alrighty, make it a good one. Thank you again for your time. And yeah, those of you in the mastery, I'll catch you in about 10 minutes.